When is the best time to day trade? Well, that's a funny question because it actually depends on you, right? There's plenty of times that you can day trade. And in theory, there is times throughout the day that will be better than others, right? It will have more volume or it will be a little bit better for certain strategies. But I will say this. It really depends on the time that you have available. So even though we're going to go over some of this here for the best times to trade throughout the day, depending on key factors, at the end of the day, the best time to trade is the time you have set aside and available. That's the best time to trade, right? So if you've got an hour a day to trade, that's the best time to trade. If you've got 2 hours, 3 hours, 4 hours, that's the best time to trade. So really the best time to trade is when you have available, right? So make it work around you. The stock market is a beautiful thing. And some strategies are going to be a little bit more successful during the high volume times, and other strategies will be better successful or highly successful during the slower times, the slower volume times. So just because a strategy isn't successful during a certain time doesn't mean there isn't another strategy that is, right? So that's the beauty of day trading. However, we will say that the common best times to trade are going to be, of course, the pre-market. My favorite time is the pre-market time to trade, 4 a.m. to 9:30. So for me, I'm not really a 4 a.m. guy. I used to be. I'm getting a little older, so it's a little tough to get up at 4 a.m. in the morning. However, and this is Eastern Standard Time, however, I do like to get to work around 6:37. So I like to sit down at the computer around 6 to 6:30. Maybe get my coffee, get ready, right? Get everything ready, and then start going over charts, look at the gap list and see what am I looking at that's gapping up. Maybe I pull over our gap list and I say, you know what? Okay, MRIN is gapping up here. So maybe I'll go ahead and look at this one. Okay, it's up 80%. This one's up 20%. Okay, this is it's got 6 million shares traded. This one has almost 3 million share float. So, okay, MRIN, start taking a look at it, right? So to break down the gap list, that's number one. That's going to be the pre-market. So 6:30 a.m. Eastern time is roughly when I'm looking at that. By 7, I'm sitting down, I'm trading. And at that time, from 7 a.m. roughly to 10 to 11 a.m. Eastern time, that's my sweet spot. That's when I love to trade. That's when I set the time aside to trade. And I basically get everything else done before and after. That way, that time, all I'm doing is staying laser focused on my trade setups. So from 7 a.m. to about 10 a.m., 11 a.m., that's when I'm trading. And I trade live in our Discord. So if you want to join, you can join our Discord here. I trade live starting at 7 a.m. every day. So you guys will hear me in voice going over my trades, my setups, where I'm putting my stop loss, where I have my entry, all of that. So you'll hear that live. So that, in my opinion, is the best time. Now, there is some pros and cons to it. Now, one of the cons that's not listed here is that you don't have the ability to set a hard stop. So during the market hours, if you're trading sometimes a smaller size, you can trade with a hard stop set to your order. What that means is when you place your order, it then also sets a hard stop, a stop loss order. So that means if you're in at $3, you can say, okay, I also want to set a hard stop at 290. So if it goes to 290, stop me out, get me out of the position, and lock up that small loss. That's okay. So we're trying to mitigate risk by keeping it tight. So during the regular market, you can do that. During pre-market, during this time, a lot of brokers will not allow you to set a hard stop loss. So instead, we're using a mental stop loss, which is completely fine. However, a mental stop loss is going to, of course, have a little slippage compared to a hard stop. So a hard stop will be sometimes a little bit faster, and it's a little bit easier for traders to stick to a hard stop as it just automatically does it for you. A mental stop, some traders can talk themselves out of it and you get into trouble, but that's besides the point. So anyway, pros and cons. So one of the pros is it's extremely volatile as well. So we can have massive wins. So today we had GPUS. So if I zoom out here, GPUS. So in this gray area is the pre-market. This is the pre-market type of move here. This is a pre-market move. This is massive. So if you're getting in on the early moves of these candles, it's up 125%. And this is a 1-minute chart. So these are 1-minute candles. So we're talking in less than an hour or two tops, you're getting over 100% return on your investment. That is huge, right? So that's what we're looking for. And that's going to be those massive moves that we're looking for. So in the pre-market, you're going to typically see that type of move, especially with these low float stocks that we scan for. So you have the opportunity to catch the early runners. So if something continues, right, like GPUS, if it continues, if you got in on this candle down here, so say I draw a line and this was the entry price because we saw it hit the scanners over here. and all of a sudden you're holding a position. Well, guess what? Even though it peaked in here in the pre-market, it continued in the regular market and continued to fly up. And I'll delete this line up here. Continued to fly up all the way up to here. So if you're holding that position from down here, you had an early entry and opportunity to get in around $1.80. It went up 380% in a single day's time. This is a 1-minute chart, and the day is not over. It's only 4:30. Right? So this is impressive. Very, very impressive. This move started around 7 a.m. Eastern time, and it's now 4:30 p.m. Eastern time, and it went up over 300%. That's incredible, right? And that's the pre-market moves that you have the opportunity to get into. So you can get into those very early. Now, the problem is there's very low liquidity at times, which means there's very low volume at times. Now, for this one, let's see if we had volume. So I'll turn on let's turn off the confirmation support resistance. And we have the volume histogram down below. So down below, we'll see this is our volume histogram that you can find at bullishboblive.com. You can see that we did have volume to pair with this. But you can see over here on the left-hand side, these candles on the left did not have volume. That's going to see these little speck reds down here. That means no volume. But these green histogram bars, boom, that's where the volume arrived. We're good. We can take the trade, and that's what we want to see. So we have those green histogram bars. Now, other stocks elsewhere, you may not have that type of volume. So you just want to be very careful. So, of course, in the pre-market session, you can have lower volume, lower liquidity. So you want to be careful. When you have that lower volume, it's going to come with wider spreads. The spread is going to be that price between the bid and the ask. So that difference between the bid price and the ask price is called the spread. So you may have wider spreads in the pre-market session. So you want to be careful of that as well. And typically that comes with lower volume. So that is something right there to be aware of. And some brokers don't allow pre-market trading. Most do these days, but some don't allow pre-market trading, and depends on what broker you have on how early you can trade. So that's going to be the pre-market session. That's my favorite time to trade, guys. Pre-market into opening bell there, opening market around 9:30. Okay, next is going to be 9:30 to 10:30 a.m. Now, 9:30 a.m. to 10:30 a.m. I think is a very high volume time. This is extremely high volume, very high risk. You're going to have very sharp moves, and you can make money very quickly, but you can also lose money very quickly. So I'm not in love with trading this time. However, we do have our strategies built for this, and risk mitigation is built in. So, of course, I can trade this. I just typically will reduce size if trading during the pre-market time. So at this time, we do have the highest volume and momentum, that's for sure. We've got sharp price moves, fast profits, but it also means you can pull back quickly, and ideal for scalping and breakout strategies. So if you see that breakout, it can break out so quickly that you can make your profit in less than just a few seconds and be in and out and then holding yourself a lotto or just walk away. Now, some of the cons is it can be very unpredictable and wild, and that's for sure, guys. At market open, it can be very choppy. It can go up, down, up, down, up, down, and then before it finally breaks out, it has to fight back and forth before it does that. That can happen very often, so we want to be careful of that. And fast decisions needed to make mistakes can happen quickly. You need to be able to make fast decisions, and that's right. So if you start to get flustered in the trade, or if you start to oversize, or maybe something's going wrong there, or maybe an order doesn't submit, and then all of a sudden you have to cancel it, or whatever, you just can't get flustered in those trades. And so it's really tough during that time to be able to trade if you don't know what you're doing. So make sure you know what you're doing before trading during this time. Otherwise, sometimes in the beginning of my career, guys, I used to sit out of that time. Nowadays, I know how to trade it because of my experience and in the indicators that we have, our strategies. However, in the past, it was not always easy. So midday from 11 to 2 p.m., this is going to be a little bit slower. In my opinion, I'm not really in love with this time frame. But again, this is more of a preference for me. I like high volume moves. I like sharp moves. I don't like those gradual, slow moves. I like to be in and out quick. I like to lock in profit. Some traders like to hold for longer periods of time. Some traders are okay with, I call it babysitting their trades, or sitting there with their trades, really managing the trade throughout the day and managing those losses. That's not my thing, but if that's your thing, 11 to 2, it's going to be gradual moves, a little bit slower, quieter. You're going to know what's hitting the scanners and what's happening because there's not going to be a lot of stocks hitting the scanners at the time, so it's more focused. So it's not a bad time. However, I think most of the major moves start to die out by about 1 p.m. So that's something to consider, 11 to 2. Now, power hour. Power hour used to be a thing. It's not so powerful anymore, but 3 p.m. to 4 p.m. used to be a thing. It used to be very hot years ago. These days, not so much, but you never know. It may come back. But power hours from 3 to 4, typically things start to pick back up because into the aftermarket, there isn't halts. There's not a lot of halts during that time. And so because of that, it has the opportunity to run. So that's a time that a lot of traders are trying to position themselves into a position before the aftermarket occurs and before the following day. But power hour 3 to 4 is a position that can be a time that's very attractive to traders. So that is one thing to check out. For me, I don't trade 3 to 4 anymore. I used to, however, it's not as valuable to me. So scrolling on down here, we've got when is liquidity typically the highest? So usually 9:30 to 10:30 a.m. is going to be the time that it is the highest liquidities, meaning that has the most volume. Again, very sharp moves. And so if you're not used to that, it's going to be something that's going to be very tough to trade. And then typically 3 to 4, you will have a lot of volume at this time too, or at least if there is something valuable or of value, you'll see it during that time start to pop up and give you some signs of life on the scanner. And news-driven spike can happen at any time. And that's exactly right, guys. So at any time, usually it's at the half hour or whole hour. So usually like 8, 8:30, 9, 9:30, right, is when the news will come out. However, it can come out at any time. And when it comes out, it can spike the stock at any given time. It doesn't always follow with volume as well. However, news can spike the chart and spike the price. So you just want to keep that in mind. So that is something that's going to adjust, that you want to adjust for. So when to avoid trading, especially for beginners. So during the midday chop, I think, guys, in my opinion, in my experience, the midday chop is going to be a tough time to trade, and that's because it doesn't have any volume. And so a lot of traders are sitting there waiting for their positions to go, and before you know it, they slip. It has that slippage because of those wide spreads. It can pull back sharp. It can pull back 10, 20, 30 cents in a single candle, and a lot of traders can't suffer that type of drop in a single candle, so it can be frustrating. So during the midday, I think that's a time to avoid. Right before major news events, it can be very slow or stagnant, so it's good to maybe start trading after something like that. So whenever we have world news or whatever it may be, it's something that you want to consider as well. And then low volume days, so holidays or even right after holidays. So some days we'll have like a 3-day weekend, and then all of a sudden when you come back on that Tuesday can be slower. So sometimes the long weekends can kind of slow it down, but any holidays is going to slow it down as well. So if you're a beginner, maybe avoid those times. So that's pretty much it, guys. Again, even though these are the common best times to trade, at the end of the day, the best time to trade is going to be the time that you have available, right? So if you have, time to trade from 7 to 9 in the morning, or maybe it's 4 a.m. to whatever it be, or maybe you're in different parts of the world. So maybe you're trading at 4 a.m. Eastern time to say 6 a.m. or 7 a.m. Eastern time. So maybe you're like in Australia or something like that, and that time is going to be a little bit more feasible for you. That's fine, right? Make it work. So we'll find strategies that work for you. Join bullishboblive.com. You guys can check it out. We've got these resource pages. These are free resource pages. Check them out, guys. We're going to be adding more to this as well. And we just want to add as much information and education in here. That way everyone can lean on this and really refer to this while looking for high quality setups versus low quality setups and really staying consistent. So guys, if you found any value in today's video, I thank you for watching. Give it a thumbs up, and I'll see you in the next one. Thanks, guys.
Remember, trading isn't about being perfect. It's about being prepared. If you're serious about improving and want to learn directly from our live sessions, visit bullishboblive.com. We're live Monday to Friday, walking through setups, strategies, and everything in between. Thanks again for watching. Stay focused, stay sharp, and keep growing.